I'm from Singapore, but I've been told to say that like my wife is half Malaysian, so like I also have a deep connection. I currently am based in New York because that's where DCG is. I started my early career in financial services, so in Stanchart and in SocGen across Europe, Asia, Middle East. So that was sort of, I used to describe it as my suit and tie career time. I'm sure I see a lot of yellow faces in the room. So like parents believe that the only job worthwhile doing is like with a tie and cufflinks and like nice three-piece suit. So that was my period. I did my time. I did about 10 years of that. And then my last role was the head of digital banking for Africa for Standard Chartered. And I saw much more interesting things happening outside the bank than inside the bank. And that was my first like venture role. And I've kind of been in venture ever since. The story is also that I had always thought that I would only be in venture for like maybe 2 years, and then I would start building again. But I've been stuck here for like 10 years. So I'm trying to get out of venture, but I'm pretty good at it, so I'm still here. I've run like a couple of funds, most of them generalists. My most recent fund was actually a fintech fund that became a climate fund. And that's when I said I didn't want to do it anymore. And that's when I joined DCG. So I actually joined DCG because 2 years ago, DCG decided that they wanted to do a lot more in emerging markets and simultaneously decided that they wanted to open the aperture to look at Web2 fintech as well, because I think there's, in sort of 10 years time, there's going to be a huge overlap between what is now Web2 fintech and sort of Web3 crypto world. And we want to be the right partners for Web2 fintech builders to think about Web3 and crypto as well, and to bring them into our ecosystem. So that's kind of the function that I'm currently working on. We do about 50 deals a year. Ambition this year is to do 100. Yeah, I just closed 2 last week, one in Colombia and one in Mexico. I was actually just chatting to you earlier about how like it's really fun to do global coverage, but also, man, it's tiring. But yeah, I mean, that's quick intro. Is that good? Is that okay? Happy to go into more detail, whatever you want.
So there's a lot of mentioning about transitioning from Web 2 and to Web 3. So maybe you can dive deeper into that. So like maybe briefly go through the transition process from Web 2 to Web 3. Are there any differences like between Web 2 and Web 3 in general? Like are those like knowledge transferable, or what are the similarities and differences?
Sure. I think before I get to that, I think you asked me to also talk about what DCG is.
Yeah.
But then I feel that most people would know what it is. So can we just do a show of hands? Like, do I need to tell you what DCG is? Does everybody? Okay, I do. Oh, I do. Okay, sorry, my fault. So Digital Currency Group was founded by Barry Silbert about I think like 8 years ago now. And I think we're most known because we own assets like Grayscale, Luno. We used to own CoinDesk. We just sold that. I think we bought it for like just under $500,000. I think we sold it for more than 100 million. So pretty good returns. That's what we're most known for. But I think again, like people forget that we're also a very active early stage investor with more than 300 positions in startups. We have a minority position in like the biggest exchange in Mexico as well, Bitso. So yeah, I guess that's who we are. We have a big token trading strategy, obviously, the subsidiary strategy I just talked about, and I again sit in the early stage venture investing strategy. So that's the house. We don't have LPs. We sort of think of it as like a Berkshire Hathaway type structure. We do have investors, SoftBank among them. But yeah, so is that clear-ish? Yeah. Most people know the brands that we own, right? But we're sort of like the silent sort of mother company. And sorry, what was your question again? Web 2 or Web 3?
Yeah, transitioning from Web 2 to Web 3, like what are the differences? Are those knowledges transferable?
Yeah. One is you need to switch from WhatsApp to Telegram as I not on it altogether. Now I'm like, most of my life is there. I think like one of the biggest things that excite me about the transition from Web 2 fintech to Web 3 is this idea of sort of decentralization, but as well being able to be operating outside the lines of some governments and some regulators, right? And I think everything about Web 2 fintech is highly regulated. It's prescriptive. It's unless I tell you, you can do this, you can't do this, right? But I think in the Web3 world, you're kind of allowed to experiment and have more thought experiments a bit more. I think another bit, and this doesn't mean that you should break the law, right? But I think what it means is that you're allowed to show some traction, get some users, get some things through without actually having full regulatory approval yet. Eventually you should seek it, which I think is quite important. And you might ask, like, why would you want to circumvent certain government controls, right? Because I fundamentally believe that like some central bank controls are unfair to the populations, right? We think about states like Nigeria, like in Kenya, sometimes it's like really, really onerous to take. The other thing I really have enjoyed about, I guess, the Web3 crypto world is that it's very global. Like everything is like built for instant like global rollout, right? And I think a lot of Web2 fintech is very local, right? If you think about most of the Web2 fintech in Malaysia, it's sort of designed for the specific like Malaysia context, right? For integration with Malaysian banks, for being aligned with Malaysian regulators. And I think just the community of build and the ambition of build, like in the Web3 crypto world, is just, I guess, so much more global, which I certainly appreciate as well. I think like my focus is certainly more on incorporating the best of Web3 crypto into existing Web2 fintech solutions. Because I think at the end of the day, I always remind my colleagues that, you know, TradFi is still Fi. Like it's most of Fi is still TradFi, right? So we need to like take people on that journey. And I think especially for consumers and for large corporates, like it's very difficult for them to embrace sort of Web3 crypto from day one. So they really do need a bit of a face, right? Like we look at a lot of stuff that we always say it's sort of like Web2 in the front, Web3 in the back, right? I think that's really important. Like I said, I'm the Web2 guy in a Web3 firm, so there's a much better technical answer to what you just asked. This is just my perspective.
I see. So let's talk about fintech right now.
Sure.
So like,
thanks.
There's a lot of fintech, right? There's like technology and also trading, insurance. Like, I'm just curious, like, how do you find your forte as a venture capitalist? Like, which one to invest in? And I mean, like in crypto as well, right? There's a lot like NFTs and also like DeFi, blockchain. So like, how do you, as a venture capitalist, focus on certain areas that you're good at, or is it like a general knowledge that you acquire when looking at these things?
Yeah, I mean, when you describe it that way, it sounds like there's like a lot of broad categories. But I think in the past, I've worked mostly in generalist funds. So we have done healthcare, logistics, retail, financial services in the same like fund. So I think like within fintech, looking at insurtech, payments, and credit, it's kind of still a smaller universe. I think from honestly, like it's a little bit of a rolling cycle. And what I mean by that is when you start investing in like payment infrastructure and you speak to the payment providers, they will tell you who are the KYC people that they really like working with. They will tell you who the fraud prevention people they really like working with. They will tell you that they're missing this credit solution for this segment of their customers. So with that data, you then go out and you find the right credit solutions for them, the right KYC providers for them. So like our own portfolio and their challenges informs a lot of what we believe we want to invest in next, right? Because it's baked in customers too. Obviously, we were talking about this earlier too, like we do sometimes take a step back and take a more macro view of like, what are the major challenges in the world going forward, right? As an example, we've been investing in a few companies in Latin America that on the thesis that currency volatility there is only going to increase. And there's a lot you can do with that in mind, right? Whether that's people wanting to preserve their purchasing power, people wanting to get paid in other currencies, people sort of wanting to purchase more cross-border. There's a lot there. So we do step back and sort of think about that more broadly. But I was also sharing earlier that like, it also depends on what people are building, right? Like we can say we want to invest in SME credit in South of Malaysia, right? But if no one's building it, that doesn't matter, right? So events like this are also good because like, then we can share what we would like to do and hopefully someone out there builds it, right? We have gotten a bit frustrated. So I think that we are also exploring just building more stuff our own again by ourselves. Like Grayscale was very in-house, right? So we might go back to doing more of that, But we much prefer to like, yeah, invest outside. Yeah.
I see, I see. So when talking about finding people who are building stuff, so maybe this is more like from the perspective of entrepreneur. So imagine yourself like as an entrepreneur. So what are the things that you feel that you must achieve in order to increase your chances of getting funds, or like what are the types of VC you should look out based on your experience? Imagine yourself in the shoes of an entrepreneur.
Yeah, and I can do a story. So like the I actually have had a startup before, which was, I describe it as mixed success. So it was a motorcycle ride sharing startup in Singapore. And for those of you that have not been to Singapore, we we don't like the heat. And so riding on a motorcycle is not like the cool thing to do. So I quickly realized that like I wasn't launching an electronic platform. I was inventing a new form of transport, which was way too expensive to do. Anyway, so point being, at that point in time, I was mostly terrified. I was maybe like 21, 22. But the thing that I did the most was practice in front of the mirror to say with a straight face, I want a $1 million valuation. Because like as like someone that's that young and you're just building it up, it's like it's very difficult to come to terms with like, yeah, this like concept is worth like $1 million. These days, like I encounter founders all the time who are like 18, who look at me straight in the eye, deadpan, with like, yeah, this is worth $60. I'm like, okay, cool. Anyway, so suffice to say, confidence is really important and self-belief. Please don't be like deluded, but I do think that it takes a healthy component of faith in yourself and what you're building. I think, especially, I mean, most people in the room here are pretty young, right? And most of the time when you walk into a room, people are going to go, what have you done recently, right? Show me the proof. Show me something you've done that's like been worth $1 million before. And I think without that, it really is like your energy, your belief, the research you've done, right? Like you might not have built something in the NFT space, but you know everything there is to know about the last 100 NFT successes, as an example, right? You are the consultant that the top 5 venture firms in Southeast Asia go to talk about like NFTs, right? You have published 15 articles like about it, right? So there's ways of like putting credibility and reputation ahead of yourself. I think there's also obviously the question of like how early to raise, right? Do I raise on a concept or do I raise after I've launched? And and I think what I can share there is the bar is very different if you're raising on a concept versus post-launch. And I actually think that it's much easier to raise on a concept because then you're raising on a promise, right? The moment you've launched, I expect traction, right? Like I expect product uptake. I will look at your user stats, right? And that's a whole other bar, right? So I think if you're in an environment, and I'm not saying Malaysia is an environment, by the way, if you're in an environment where there are enough angels and early investors that are willing to take a concept bet, like do that. But if you're not, then sorry, I guess you have to launch and bear the brunt of it, right? I think what and I'll wrap up, but I think the point is when we look at founders, like it's very much about how can we establish that you were the best team to build this, whether that's because you would rather die than see this fail, sure, we look at that, but do you have the right context, connections, and technical expertise on your team to make it happen, right? I think there's a temptation to like throw logos at the problem and throw advisors at the problem. Like I've seen decks where it's like, and now I'm complaining, but like I've seen decks where it's like 2 founders, 10 advisors. I'm like, what do these advisors do? Like, oh, you know, we pick up the phone and call them every 3 months. Doesn't matter, right? So sorry, I'll stop there. But basically, build credibility, like establish yourself as an expert, and I think that goes a very, very long way.
I see. So a follow-up question on like when you as a VC, you see things like stats, user stats, and like how much potential a company is, right? So one question is like, how do you as a VC determine what platform do you use, or like what tools do you use to determine whether a company is worth investing or not? Is it Is that a practice?
I think every venture firm is different. I think at DCG, we are probably the most data-driven venture firm I've ever been a part of, right? And we benefit from having, with more than 300 direct early stage positions, we have invested in more than 40, 50 funds as well, so we have access to their data. And we know exactly what the expected B2C CAC should be for a early stage company in Colombia, right? We know that $20 is the right number, right? And if you are at 40, we call you up, right? So fortunately, we know what the right number is for like good user growth in each of these markets, in each of these priority segments. So if there's outperformance, we can very quickly identify it. I think the question then comes, if it's a category that is unclassifiable, right? Then of course you've got to triangulate a little bit, but I do think that we benefit a lot from just having a wide portfolio. Because we also do a backward look, right? Because we've been investing for the last 8-10 years. We've got companies that have IPO'd. We've got companies that have raised E, have exited those positions. So we work backwards. Like, what was their growth rate in their seed stage? What was their growth rate in Series A? What were some factors, right? Like, we look at things like, if there were 3 co-founders and none of them are technical, what is the probability that they will break up in year 5? Like, we have all of that data broken down. And it's really fun. It's a really cool, like, geeky experiment to like get into. But it doesn't mean that if the algorithm says no, it's a no, right? But it certainly doesn't inform to a great deal.
I see. Just a follow-up question on you saying that this room is quite young. The audience is quite young.
It is relative, right? Like, I'm just ancient, so.
Yeah. So, like, do you have any advice of people wanting to step into working as a venture capitalist?
Don't do it.
So, like, could you briefly go through, like, let's say in the early stages of life, so what do you expect? For example, like, what is the gradual things that you would do? Like, maybe in the beginning it's quite boring. It's a lot of hard work, tough hours, maybe. Like, how does it transition, like, towards the later stages of the career?
Yeah, I still stick it, don't do it. Here's maybe like some flavor as well. So I also run like a fellowship for first-time fund managers that are based in Africa, especially those that are operators that are transitioning towards being a venture capitalist. We spend the first 2 weeks literally on all the reasons you should not do this. So I'm not kidding when I say don't do this, right? It's like, if your goal is to learn about different business models, go be an academic. There are many, go be a research writer, publish a blog about different business models. There's ways to do that, right? If your goal is to just, is to discover new fund models and push that forward, sure, okay, yeah, because this particular fund model doesn't exist, you should do it. If your goal is to just invest, then join a firm and don't start a new venture fund, right? So I think there's been too much press that glorifies and makes it a sexy profession. And I think there are many other ways to make strong returns on your capital. I just think that venture capital is one of the most exciting and intellectually rewarding ones. So it's like, what are you optimizing for, right? Like, if I wanted to really have an impact in the world, like, I actually would think I should go and build a company, right? That actually has impact on like consumers, actually rolls out a product, right? But I am not that good at that. So your question was sort of like, how do I break in, right?
Yeah.
Honestly, like, there's 3 or 4 classic pathways, right? And this is all widely known, right? Classic pathway 1, go be a founder, right? Go be a second-time founder. Get into YC, get into Techstars, right? And then launch a microfund, and then do averagely well, and then join a firm, right? One way. The other classic way is get to HBS, right? Get to HBS, join McKinsey, then join a PE firm, and then go, oh, I had a reflection about my life, and I want to work with more like young startups and not work in large companies. Okay, cool. Revelation, join a venture fund. Like, I think these are all like the more classic like pathways. I think I've also seen a lot of people sort of hack their way through it, and this is sort of more like the ecosystem route, right? It's like, I mean, case in point, we are very actively hiring like in the US and in Latin right now, and I'm just trying to think through like what are some qualities that we look for. So some of the ways to hack it are, we really need people who can see everything that's out there, right? Can I look at you as a junior VC and say, of like the 20 hottest deals last year, did you hear about 10 of them before everybody else, right? If I speak to 20 of the top venture firms out there, do they know you? What have you contributed to them, right? If I speak to random sample of like 25 founders in this region or in this sector, have you supported them? Have you worked with them? Can you point to them? Can you point to work you've done with them, right? So I think there are ways to like hack it, but make no mistake that the people that hack it through, that's maybe like less than 10% of like the people in venture, right? Like most people still go through those two primary like pathways. Maybe not fair, but it kind of is like what it is, right? I can share like my pathway, right? So I started a fund on the basis that if I invested in this fund, like I would be able to get them bank contracts, financial service contracts, get them regulatory approval. And that was why I have a reputation in Africa for, if you want to roll out a large banking SaaS platform, go speak to Aaron, right? And so I built out a very large angel portfolio before like I had my first fund, right? So I think then of course, the question is, everyone here is really young, where do you get the capital to like start angel investing if everyone expects to do so? But just write about it, right? Like I keep going back to this like blogs and publications, like just write about it to show expertise. Look at the deals that are out there, write it up, publicize it, right? Be the founder's partner of choice to like articulate and narrate their deals. This is really important, right? But don't do it. There are much more exciting and more important things to be doing with your life.
I see. So like another question would be like, let's say I'm a founder and I'm looking, there are a lot of VCs reaching out to me, for example. So like, how do I determine which are the good ones, or like, is it more like I know what I want, and then I find the ones that suits me? Like, how do you differentiate between like good VCs versus not so good VCs, or is there like, yeah?
Yeah, good question, very good question. I first want to say congratulations on having all the VCs reach out to you and have a bit of a dinner. From my conversations with most Malaysian founders, that is not the case. So congratulations. I think this is more honestly the case like in the US, right? Where there's usually a really hot deal, there's like 10 venture firms trying to be the lead in that deal. I think ultimately it's about who you think will add value to you and your firm. Look at track record, I guess. Definitely speak to all the founders that they've invested in. Understand what's missing in your stack, right? Whether that's your talent stack, your access stack, your geographic stack, right? So if you want to launch in 5 years in the Gulf, find someone that has experience there, right? If not a venture firm, at least an angel that has experience there. If you feel that, and we've done this with a few companies, so we recently invested in a company in Mexico called revolves, which is sort of like, do you guys know Toast? Like the sort of like the restaurant app, basically, right? It's like the Toast for LATAM. And they let us into the round because we can help them build credit and we can help them build payment rails. And so understand what's missing in your team, because they didn't have financial services expertise, we did. And then think through who has invested in the companies that they have invested in, right? Because venture is this like long chain of like people you have to work with, right? So if you have investors on your cap table that have never been able to get follow investments from like top tier venture firms that you eventually want on your Series B, Series C round, then please don't work with them, right? There is a direct correlation between who is on your seed cap table and who eventually comes in your A and B. Now, of course, there are always exceptions to the rule, but and why I think your question is great is because this is one of the key differences I see between first-time founders and second, third-time founders. First-time founders are like, whoever gives me capital, I'll take it because I need to pay my guys tomorrow, right? So, like, unfortunately, that's just the situation. Second, third-time founders are like, look, this is who I want in my pre-seed. I want these angels because they will get me into the right rooms to get the right seed people. I want these 5 firms in my seed because 2 of them are going to give me this, 3 of them are going to give me this. At A and B, this is what it's going to look like, and this is where I'll exit. Like, they have it all panned out, right? So I think, fundraising, lots of founders don't like it. But if you're building, quote unquote, tech startup, like, it's just part of the game, and you should have thought it through. Back to my credibility question, right? Going in front of your first venture firm and going like, I've thought about all of this makes huge difference. Hopefully, is that okay? Yeah?
Yep.
Okay.
So final question. So like right now, what are your thoughts on the fintech landscape in Malaysia? Like especially when right now we don't have like a regional champion in fintech as of now. So yeah, what are your thoughts on the current fintech landscape?
I think like you heard yesterday, right? Like I think it's really that the conditions exist for it, and I hope the people in the room believe me that the conditions exist. So like I think from a talent perspective, why of course like you see Malaysians being successful in like in Google and Facebook in Silicon Valley, like they've gone on to build large companies elsewhere, right? Like why is it that Malaysians haven't built like a large scale enterprise in Malaysia? That's super weird to me. So I don't think there's a talent problem. We just have to make sure that the right talent doesn't leave, and we have to make sure that like the right talent stays to build here. One thing. Two, I think to the point I mentioned earlier, capital availability. I think as much as there's been a lot of government effort to like push money into like early stage companies, like I still think that there aren't enough commercially driven early stage venture investors here. And then the final thing really is just like ability to dream, right? And this is, I feel like I might get stones thrown, but like I feel that there also maybe aren't enough founders that have both in the Venn diagram decided to stay and want to build something global and regional, right? Because I mean, my instinct is that most people that think they want to build something regional go somewhere else, or think they want to build something global go somewhere else. And maybe like me, they dream of one day coming back to build it, but they haven't done that yet, right? And maybe they haven't done that yet because they hear about capital availability, right? So there's like a bunch of things that need to get solved, but I think there's a lot of fertile ground like for it as well, right? You are in the center of Southeast Asia, geographically speaking, like there. Culturally, right, you've got such a diverse mix of cultures that I think navigating Vietnam and navigating Indonesia from here is probably easy to do. You have access to all this government funding as well, so soft capital is also wonderful and it can get you so far. So I'm hopeful, but I don't think it's a sure thing. And I said this walking in as well, I think we just all need to like collectively believe that it's possible, otherwise it just really isn't. So yeah. Cool.
Yep.
Does the audience want to like ask questions?
Yeah. So right now we're going to open questions to the floor. So, yep. Let me, 1 second. Pass it to-
I guess my voice can be loud enough.
It's a pretty small room, I'm sure.
So generally, crypto's been very insular with its products. Like
Sure.
the people who use crypto products are crypto people,
Mhm.
and there's always this holy grail of finding a mainstream product.
Sure.
So with your experience and with the recent maybe mini bull run, like do you see any potential products that can be widely used in the mainstream?
I think the first products that are crypto powered that are used in the mainstream will have people not realize it's like crypto backed, right? I think what we're seeing a lot of is companies that want to make sure that their user never has to feel that they need to keep any keys, never has to feel like they're really touching something that's like on the blockchain. But what do they really want? They want stability, they want ability to move their money in like a frictionless sort of like high trust environment. Like, I think ultimately once you deliver those propositions, they don't need to understand the rest, right? And for better or for worse, like a lot of people building in crypto like are very proud of like the tech and like they want that to be like on the front of the sticker. But I think sometimes they do miss, at the end of the day, if you deliver value, right? It doesn't actually matter how you deliver it. So that's my hope.
Do you see any specific products or product types that might come up in the next year or two?
Yeah, no, so I don't have to, I can just go to last week. I live in the present. So last week, I talked about one of the investments we made last week. Last week we made an investment in a company in Colombia. It's called Glyn. And they're sort of like an employee payroll platform. I don't even know anything about like the Colombian peso, but essentially it's just been another one of those like devalues all the time situations. So what they allow Coca-Cola, Unilever, all these large corporates to do is actually pay out salaries in stablecoin and allow them to store value in it, and then also make other payments to like their healthcare providers, to rental companies, like in that same format. And I think that's again like one of the things that they had to do a lot of work to make sure the government was okay with employees getting paid that way. They had to do a lot of work to make sure that US-based employees could pay directly in US dollar into USDC without touching the Colombian peso, right? So like, I think I'm very excited for that, right? But is it technically the most complicated thing to do? No, but regulatory and all that, like I think that's kind of where, and this is the stuff that's exciting for me.
Hi Aaron, thanks for coming. I'm Asfar. So recently I've been reading online that in the tech industry there's been layoffs.
Sure,
I just want to ask your opinion on how has that affected your deal flow, and what are your advice for companies that are starting out in these times, or companies that are further along the arc? What should they think about their product and their relationship to investors? So the first is, how does it affect your deal flow, or does it change the way that you view companies? And how should a company navigate through these times if they are looking to raise, or if they are further along the arc of early stage companies?
I mean, again, like we have companies that are experiencing that themselves directly, right? Like we sometimes are like part-time CFOs to our company, so we do help them analyze what their layoff strategy should look like. So on the portfolio management side, like we're very actively managing that of the companies that we're invested in. I think from a deal flow perspective, I'm just trying to understand what you mean. So like, I guess from founders building new things, I personally had hoped that like all these people getting laid off would like immediately start new companies like in the same space, right? But for better or for worse, depending on like whether you're in big tech or not, your package is like amazing, right? Like you get to like go on a 2-year holiday like after you get laid off, if you're in the right firm, right? So I also feel like people aren't really like coming back to build immediately. I think people are also waiting for this bull run, right? And I think people are beginning to start building now in anticipation of that, and we're beginning to see like some sparks of it. I think as a founder, if you're starting something now, it also means that from a talent availability point of view, there are so many people out there that are amazing that you can bring on board to your team, either as a co-founder or as a senior leader, right? Because, and again, like, this is a relatively young room, like I've been through many layoff cycles in my life. The thing about layoffs is that you aren't laid off because you're a poor performer, right? You're laid off because the company decided this particular function, this geography is not as important anymore, right? So you're getting people in the market who wouldn't otherwise have been on the market. Like eBay, PayPal would have kept these guys as much as possible because they're amazing performers. Suddenly they're on the market and they're available for you to swipe up, right? If you can convince them. So I think it's great from a talent availability point of view, for sure.
Hi, hello. Hi, Aaron. I'm Han here. I just wonder, is there any area in crypto that excites you now, like layer 2 or zero knowledge? Which specific area that you find interesting?
My earlier statement, I'm the Web 2 guy in the Web 3 firm, so I can't really speak to that. I think, because I'm just preparing the report, we have mostly last year been doing infrastructure stuff. We've definitely scaled back a lot on like gaming NFT stuff and sort of fandom engagement stuff. I think a big theme for us this year is really the intersection of like crypto and AI as well, like how that can unlock more utility there. Otherwise, yeah, I'm sorry, like I said, it says on the tin, Web 2 guy, Web 3 firm, sorry.
Hi again, Aaron.
Hi.
So when it comes to regulation, are there any insights or strategies you have been working perhaps with them? Because for example, Google at one point in 2018 had to be frozen because of most of their funds being monitored by regulation. Do you have any insights or stories around working with regulation and eventually making it through the other end?
Yeah, I think it's patience, endurance. But I think people sometimes forget that like the regulators want to do the right thing, right? Like they also want to be seen as progressive, and many people at the regulators also want to see like the world move forward, right? I think it's very difficult for them to make the case because they only get dinged if things go wrong, right? They're not really rewarded if things go right. So I think feeding them with like the right information, making sure they're hearing about it from the right people, having them be put in touch with like other regulators as well, because regulators very regularly take inspiration from each other. But I think a lot of it is patience and understanding, right? Like, you know, DCG was one of the founding members of like the Blockchain Association in DC, and as a result, we do a lot of lobbying work that way, and a lot of it is just building comfort, you know, making sure that they're okay with it, and just proactive engagement, right? Like, don't wait for them to send you an information request. Like, go, hey, we're launching this new thing. This is what it's going to look like. What do you think, right? And I think that's really appreciated. So, you know, never see regulators as like this, oh, they're trying to beat us down, right? They're just doing their job. And like consumer protection is an important like function. Making sure that the ringgit doesn't get like, you know, loses relevance if we end up all using USDC. I think that's important like for the economy. So they have a role, right? And I think we've got to understand what their end objectives are and help them like achieve those goals. We're all in this together. It's not an us versus them.
Hey Aaron,
Hi.
Eason here. So I have a question. Basically, with what you mentioned just now, that for some, like relatively speaking, it's easier to raise with a concept than already having launched a product.
Yeah, I mean, and more acutely if you're younger, but yes.
So if let's say I have a concept, what do you look for within that concept that makes you think, you know, like this guy or this idea, I'm going to invest in him? Because most of the time, maybe you don't even have a validated market or a validated product yet. So what exactly do you look for in these kind of concepts?
Yeah, I'd say pre-launch doesn't mean pre-validation. There are many ways to validate without launching, and there are many ways to validate without having registered the company or getting your first customers, right? So I think what's important is that you've done the work that gives you as founders conviction that this is the right thing to do, right? It wasn't we woke up this morning and then said this is the right thing to do, right? Like, we have thought about this for 6 months. These are 40 people we spoke to. This is what we heard from them. We refined the questions. We spoke to another 10 people. We've consulted some regulators. We've done the legwork like around this, right? And this is why we believe it is successful, right? And again, like, I think don't take the raise with just a concept as indicator of like raise after a concept you've come up with without speaking to anybody, right? I think pre-launch and pre-validation are just very different things. There are ways to like get some data points before that.
If I may just do a follow-up.
Yeah, sure.
How much is enough? So like, for example, like what you mentioned, right? Maybe I spoke to like 40, 50 people. Is that enough, or should I be speaking to way more people?
Depends on
In
your
order-
product. I mean, if you're selling to, let's say, Malaysian banks, and let's say there are only 15 worth speaking to, and let's say you've already spoken to 5, and of those 5, you've spoken with like 10 individuals in those banks, all of them have come back saying, for sure, then sure. But if half of them have come back saying, I'm not sure, then maybe you need to speak to different people. You know, I think it depends, right? And this is the thing, right? One thing I didn't understand, and I'll take this. One thing I didn't understand when I was 21 was that I thought that pitching was a one and done situation. It's not, right? My job as a venture firm is to make sure that I deploy capital into the best founders. So I want to work with you. I need you to succeed. I want your idea to work. I want you to roll out. I want to inject the capital into you. If that's my KPI, right? So I think a lot of founders are really afraid to like share, oh, I've only spoken with 2 banks. Is this too early? Like, it depends on your positioning. Just say, I have this thing, I spoke to 2 banks. What do you think? Should I speak to more? Like, we're very open to like saying, yeah, I think, come back later, right? And that's also why like, and sorry, I'm going on a tangent here, but that's also why like we have very deep partnerships with like, again, the YCs, Techstars of the world, and like we have a deep network of like angel investors that we like working with as well. Why? It's because very often we meet people who are like, we've spoken to 10, but we really need a little bit of money to go speak to 30, right? So then we say, oh, yeah, we can't do anything right now, but here's like 10 angels that like us, like you, cool, you know? So it's a collaborative thing. Please don't ever feel that it's like one and done. As long as it doesn't come across as I want an answer now, and it comes across as I want to build with you, we're in this together.
Thank you.
Of course.
So yeah, my name is Richard. Yeah, so I want to ask. Just now I heard you talking about like AI with crypto. So I want to ask like, how do you feel like the AI could potentially integrating with Web3 maybe in the next 3 to 5 years? Because what I think is like, so if you let's say want to bring off on chain, it's quite unfeasible like practically and technically, right? So I want to ask like your personal opinion about like the integration of like Web3 and AI.
Yeah, sure. So I mean, there are a few aspects of that we're excited about. I think the first one is really on the compute side, right? So obviously we also own like Foundry, it's one of the biggest Bitcoin miners out there, and we think that like crypto rewards are a great way to unlock more compute resources and democratize access to compute resources for AI use cases, right? Because if you think about if I'm starting a new AI startup and I want to like train an LLM, like unless I've raised $100 million, I have no chance of like accessing the right compute, right? This is a way of democratizing access. The other part of it is data, right? So I think all these models need to get trained on data that is very often very private, right? Like we're talking about health data, financial data, maybe education data, less private, but especially health data, there are lots of regulations and restrictions on how that can be shared. So if you're able to then put that on the chain, make sure it's sort of valid in the right way, I think makes sharing of that much, much easier and allow for training of like much, much stronger models as well. So I think those are sort of two areas that we see sort of like blockchain playing a role in AI.
Yeah, thank you.
Of course.
So I think we have time for one more question.
What were some of the most interesting pivots you've seen in your role
Oh my
in
God.
VC?
That's taken a bit of a spike in the last like 9 months, for sure. Most interesting. There's also most interesting pivots that I can talk about. Wow. A lot of what? So I think I'm struggling because most pivots have been boring, actually. Like most pivots we've seen have been like, we rolled this out for individuals and now we're doing SMEs. Or we've built this tech for like large corporates, but then, oh, actually we're just gonna roll to consumer, like trade ourselves, right? They've been pretty like logical. But honestly, like some of the I never thought I'd see so many of these. It's called the pivot to nothing. And I think that says a lot about, so when I say pivot to nothing, it means that some of our portfolio have decided that we're just done, right? And we don't want to build anymore and we're just going to return the capital. And I think that's something that we respect a lot. And very often it means that we come back and try and back the founder for the next thing. Because I see a lot of founders, especially again, first-time founders, that have this compunction to, I need to fight till the dying last dollar, right? It's not working. Just like give the capital back, you know? Don't feel the need to like push on. Because it also is life energy sapping.
Yeah.
So, yeah.
Yeah, makes sense.
Yeah.
Has VCs ever had the influence to force a founder to pivot?
No, I mean, back to his question about picking the right venture firm, right? Like, I think there are most venture firms that have built a long history and track record and have done well will never force. We provide data points.
Yeah.
We might sit on the board and we might bring it up time and time again. But ultimately, the founding team has most of the voting shares.
Yeah.
And so they ultimately decide. And by the way, like if you force a pivot and the founding team doesn't believe in it, what's the point? Like it's not going to do well. But I understand the genesis of your question. because in capital scarce ecosystems, perhaps like this, I do see a lot of very aggressive angels and more traditional investors, the kind that come in and go like, I'll invest, but I want 60% of your company, right? I invest, but I want 40%, and I want to, all this. That's where I see that happen more, and it's never worked out well. It has never worked out well. Not for anybody, For someone's ego, maybe it worked out well, but financially it hasn't worked out well.
Thank you.
Of course.
So I think, looking at the time right now, I think we're going to end this session. So maybe let's take a quick group photo and then.
Yeah, and I also just want to say that, on Twitter and all that, happy to, engage Dan through. This doesn't have to be the last time you could ask questions. I'm still on the road for a little bit, so if I'm delayed by answering for 2-3 weeks, forgive me. But yeah, I'm pretty good with my DMs and like that too. Cool. Thank you.
Thank you.
Cool.
Thank you.
Fun.
Yeah. So we
Oh. Is there a usual place you guys do this? I'm sure there's a. Yeah. Okay. Yeah. All right. Good to meet you. Ah, cool. Yeah. Nice. Ah. Yeah.
How long are you in New York?
I leave on Sunday. Yeah.
Oh, but you're going with your wife?
Yes.
CNY.
No. It's
update, right? I think last week last meetup we mentioned that there's a node workshop going on, and just update. So the first round of distributing nodes is done. So it's 2 for community and 2 for ETHKL contributors, and the goal is to make all those 4 nodes sync or make it online, essentially. Yep. So this is just an update. Oh, and next, meetups. So on the 9th of March, this is in Penang, they are holding a meetup. This is sponsored by the Road to DEFCON initiative. So you can see that there's speaker sessions, that's me right there as well. So yeah, it's a half-day event at Penang. So if you are near the area or you are interested to find out, yeah, you can go. It's on the 9th of March. So meetups. This is next week on the 15th of February. So actually we have guests from DAO, is a Taiwan group, mainly talk about public goods. We still haven't decided the venue yet, but Noah will be here from Taiwan. And the topic that right now that we have is like Silver Tank, decentralized identity systems. So it's more public goods. So if anyone interested, you can check it out. I think the event will be updated very, very soon. Okay. So meetups again, but this one is online. So this is an online session. Tentatively, we are holding in between 21st to 28th of February. It's with Hyper Oracle. So for people who are enthusiasts in ZK, so it's ZK infrastructure essentially. So if you want to learn more, check it out at our meetup page. Okay, so can everyone give a round of applause first right now? Yes. So a quick update. So for ETHKL this year, we applied for a grant to cover all these pizzas and also like the house at the hack house. So we applied for a grant for us to sustain this year, throughout this year. And then we got it, and it was a very, very short notice. I think we got approved like within 1 day. So I'd like to say thank you, EF. And also, yeah, let's do good this year, and next year we apply grant again. Yep, that's all for my session. So I'll pass it to Nick to talk about the monthly run-ups.
Thank you. Okay, GM. Now, this is your monthly summary of Twitter scrolling. Wait. Yes, it's your 1 month summary of your daily Twitter scrolling. Okay, so in terms of Ethereum upgrades, you should all be aware that the Denkun upgrade is coming. And this, the summary of Denkun upgrade is that it introduces blobs, which for users, those of you who use L2s, how many of you here use Arbitrum, Optimism? Yes, so the current upgrade helps to provide cheaper transaction fees on layer 2. As if Ethereum layer 1 is not expensive, Ethereum layer 2 is not cheap either. It still costs around 1 ringgit per transaction. And with this upgrade, it hopes to bring it down even further, so by making more availability for block space. So as a user, you will just enjoy cheaper transactions, cheaper Ether transfers, cheaper swaps on layer 2. Good things for all of us, especially after you review this. Okay, so Blast is a new shiny L2 with a new concept called native yield. Is there anyone joining the Blast Big Bang competition? Yes, Yudesh, as always. Anyone else? Anyone else joining the Blast competition? Yes, Chen, wonderful. Okay, so this is an announcement for those of you who are builders, who want to participate in building a new application on top of Blast. There is the Big Bang competition, which is an open beta for people to join the developer program. The first initial Blast airdrop will be given to primarily developers. So just by building on Blast, you are eligible to a substantial amount of the initial Blast token release. So plenty of incentives if you're looking to launch a new project. All right, Google has silently become multi-chain. From the last time we noticed that Google actually provided blockchain address balances, previously only on Ethereum, but recently it's seen that it seems even Google itself seems to be moving towards a more multi-chain approach. So if you Google your address, and I've tried out most addresses, it seems to be that you will be able to get a list of all your balances across multiple chains using very familiar explorers, all by the scan mostly. Yes. Okay, anyone here uses, what are your favorite stablecoins actually, for those of you here? Can anyone just shout what stablecoins you use? Like, what stablecoins do you guys primarily use? Luna, okay, glad to see you're still here. What other stablecoins do you guys use? USDC? USDC. USDT, anyone? Okay, I think these are the majority stablecoins. But for those of you who use MIM, which is Magic Internet Money, Magic Internet Money is also a form of stablecoin, but unfortunately it was hacked for over 6 million today. So if you use MIM, I think those of you who are CoinGecko, you would have seen the price go under $1, but thankfully it came back to around the dollar peg. So this is one of the risks of using emerging technologies, emerging stablecoins such as MIM. But glad to see you all are sticking to safer coins like USDC, USDT rather than Luna. Okay? I actually can't read Chinese. Does anyone know what it says? Okay, so actually for context is that, okay, for context actually, Vitaly can actually speak pretty good Chinese from my understanding. He did an entire podcast in full Chinese. He's been recorded to sing Chinese songs in KTVs. I think this is something that says that I like to learn to meow, is it? Something like that. Those of you who can, yeah, okay. So the conclusion from this is learning Chinese is important, but also it's a reference to meme coin holders because most of them just buy into coins and just learn to follow meow, meow, meow. Just like this. Yes, it does control your net worth if you have a lot of ETH. Okay, and lastly for local news, Luno has enabled Ethereum staking, so you can now stake with Luno for as little as RM1. Has anyone tried the product actually? Ethereum staking, okay, looks like not many users here so far. Oh, you tried it, right? Okay, yeah, so aside from all your staking providers like Lido, Coinbase, Binance, now it's come home locally to Malaysia, and you can try Ethereum staking on Luno. I've yet to test it as well. I think that's more of a question for the Luno folks. Okay, with that, happy Chinese New Year, guys. Don't get too fat.